Hi, I'm Ken Leon, Director of Equity Research, here to talk to you about the housing market, digital disruption to sell a home. Here's our standard disclaimer, if you can take a look at this. So we're here to talk to you about the digital disruption to selling a home. We think digitalization is in the early innings, really a sea change in the housing market. And we think that the opportunity of emerging disruptors have a competitive advantage with their expertise in software and data. And here we're going to walk you through that. Housing market today, first of all, very strong. We think there's plenty of room to grow. COVID-19 pandemic has also created this major shift from high-rise living to single-family homes. We've had economic recovery, and yet there's been a change, obviously, how we work, where we work, and that's also been a really significant catalyst for migration around the country. Housing has also benefited with low mortgage rates. This has brought on increased demand. It obviously has impacted higher average selling prices. We've had limited existing home inventory, and on our theme today, with the scarcity of inventory, an anxious home buyer looking to get that home, it's a seller's market. So we think, mortgage rates probably move from green to the yellow signal if we get to above 4% rates. And of course, all areas of housing are doing exceptionally well. The stock market wealth effect has also enabled higher price purchases, vacation homes, and home remodeling, and consumer confidence, and we've seen higher household savings. When we think about the housing market and how to buy and sell a home, it is still mostly offline. We're beginning to see in the last few years online website search or video or using mobile or tablets, mostly to get an idea about searching for a home, not necessarily doing the transaction. And real estate agents play obviously a key role. Many real estate agents, the average in the US today, only sell 2 to 4 homes per year. Many are part-time workers. So there really isn't this hone-in system for executing on a sales transaction for a home. Use of the internet is on the increase, and when we look at this from the standpoint of by generation, the millennials are taking up really where they want to get all the information about the local home market, a particular listing, and they're doing this again via laptops, tablets, or mobile devices. And increasingly, most generations now are using the internet to search for a home. So when we get to the point of transactions, the real estate market is ripe for change. Each year, this was 2019, 1.6 trillion transactions in annual residential closings. The process is very difficult. We highlight here that doing business, it's mostly offline to legacy real estate brokerage firms. That's about 90% of transactions are involved with an agent. The sales process is complex, and it's one that is an experience that is new to most home buyers or either sellers. It's offline, it's time consuming, and it's uncertain. And in this market, especially with scarce inventory, speed and accuracy to close transaction is important. We also point that in the legacy approach for real estate transactions, many of the steps are difficult, and then there's unforeseen events that do occur that can hurt closing on a sale. Here's an example where we highlight a $240,000 home for sale. Again, historically, maybe not in today's hot real estate market, 20% of deals do fall through. It could be bank appraisals, but when you begin to look at all the costs besides the purchase of the home. You can see here that there's the high broker commissions, seller commissions, closing costs, and there's also, when there are delays, then it creates the question of, I might be owning two homes. It could be a double mortgage. It could be moving costs, staging, et cetera. So these are very significant. And again, we think that over time, if you're able to move to an online, shorter duration in the closing process, you're going to get the benefit of possibly removing some of these costs and delivering a more accurate and competitive process and home valuation. So the mission here is executing on more efficient steps, and clearly the offline process is challenging. Fast forward today, and it's really not today. The genesis for this presentation was my expanded coverage of some of these digital disruptors and doing a thematic research. And here what we're seeing is, going back to 2012, tech companies with their expertise in software have been creating an alternative to the offline closing paperwork. They have studied the market. They've come up with an agile online systems that appeals to millennials who are very accustomed to banking or shopping on Amazon online. So this holy grail of online, simplify the complex legal documentation for title, mortgage, closing, and coming up with something that is very simple, user-friendly, online. And many of these new disruptors have come up with this solution. We're also finding that what respondents want in all of these surveys is convenience, and to my example before, removing any cost or financial risk, which brings you to certainty. If you go one layer deeper in terms of these digital disruptors, for over the last 10 years, they have been building proprietary pricing models and marketing tools. Some of them, like Zillow Group, of course, have been doing listings for a long time. Others have been like significant in terms of mortgage origination, like the Rockets companies. And they're using those databases to move into building an engine to take care of transactions. It's a high margin part of the business, and that's what that 90% of the real estate brokerage firms own. So data science is making this happen. We're also seeing the ability for centralization across the home journey. Real estate today for transactions is still local. These firms bring a national platform, a national focus, and they're able to do this in a way so that they can scale and have repeatable success. Software enabled, and we think that this is just the beginning. We're only in like the second or third inning of this process. And we think if you're not in certain parts of the country, like the Northeast and Mid-Atlantic, you really haven't seen this, but in the West Coast, you have. Before I get to our recommendations and more about this topic, I just want to point some of the risks of the housing market, including this trend. This trend is going to happen, but obviously the housing market is cyclical. Certainly we're at a high peak of the market. We think it's going to be extended, but again, things can change. There's no question that we could face a market downturn. But like other monolithic changes in our world in terms of how we live, wireless is an example I know well, we think this is going to have traction and it's going to dominate how we buy and sell homes over the next decade. We think it's not a question of the incumbents holding on to their position. Technology is going to change everything. Here's the recommendations. Zillow is a buy recommendation, dominant position in residential sales listings, digital advertising. As I mentioned before, expanding this engine of transaction businesses. Open Door Technology is a SPAC company, so it's got some other issues related to valuations, but they have one of the best-in-class e-commerce technologies for building this platform for over a decade. the Rockets companies. Many of you know this company as related to Quicken Loans, but this is their really launch into mortgage originations is their strength. Digital is now their new brand. They just changed their name from Quicken Loan to the Rockets companies for retail. And there was a disappointment in their recent results. They had expected for the second quarter narrower margins on lower mortgage origination volumes. They had very strong first quarter. It's a hold recommendation, so is Open Door. We don't cover yet Redfin. Many of you know them. They're actually in 95 markets for online residential real estate, and their platform is exactly to allow potential buyers to make an offer online without an agent. All four of these companies, I think, are going to be much larger companies over the next couple of years. So that concludes our discussion about housing disruption. To get more about our views about these companies and the thematic that we did on the digital disruption, you can go to Market Scope Advisor or get more information on the individual research that we have on the companies and much more. Thank you for joining me today.